What's going on, guys? Terry James, your mortgage guy, coming to you. Today, what I wanted to talk about is something that a lot of people have been kind of going over. The more, people I talk to, it seems to be a reoccurring theme of kind of setting the expectation of what to expect in the home loan process and how easy the process should actually be. A lot of people are out there and people are having different experiences, but I kind of want to tell you and break it down for you how easy this process really should be. It's really not hard when you think about it, and one of the first things you have to look at is really simple. We're talking the first step to the home loan process starts with the application. So you have to provide an application. You have to put in, all of your information, name, date of birth, social. Of course, your credit report has to get pulled. That is going to be the very first step if you are trying to get a home loan in the home loan process. That is step one. You have to apply. And as I've said before in my other videos, we're talking about credit pulls, what that means in the home loan process. I won't get into details, but if you're going to apply for a home loan, if you're going to take that step, you have to apply, and it's not going to kill your credit, okay? So that's the first thing. Second thing, once you apply, your loan officer, your lender should be reaching out and should be letting you know exactly what documentation you need, okay? So as the mortgage expert, depending on what kind of income you have, depending on what kind of job you have, how you're paid is going to determine the income or the documentation that you need. Okay, that's the first thing. So once you apply, you have your documentation. That's the first thing. The next part of this process, which I know if you don't know, that's why that's why I'm doing these videos, is to educate and provide this information. The next step after you have applied, you've had your credit pull, you provided the documentation. The next step in most cases is getting that information in front of an underwriter, okay? Because anytime you go to apply for a home loan, it's going to sit down with the lender. The lender is going to get in all that information. And no matter what home loan you do, no matter what lender you use, that documentation has to go in front of an underwriter. So the third step when you sit down should be, and one of the questions you should ask is, hey, now that I provided you all of this, before we start to go out looking for a home loan, are you going to send this information into an underwriter? That should be one of the questions you should ask your lender. Because from there, the underwriter takes an initial look. At this point, you're going to get what's called, in most terms, is going to be a conditional approval. What that means is they've taken a look at your application. They've looked at your documentation, and what they said is based upon your documentation, underwriting has these other questions, or they're looking at something that may not make sense to them. Well, we see you had overtime for this year, but we don't see it for the previous year. Fill in the gap. So there's a lot of things that underwriting is going to say, but they say based upon our review, you're approved for the loan, but we need to know the answers to XYZ, whatever those questions are. So you have a conditional approval at that point, meaning based upon these other conditions, we can approve you for the loan. That's the third step. Now, I want to stop right there real quick, because to really determine who you're dealing with, like I said, you got to interview your lender. To determine who you're dealing with, a lot of the times, once you provided that documentation, a mortgage expert, if you're dealing with someone who is professional, who knows what they're doing, they are going to be able to send that in already knowing what underwriting is going to ask for. Okay, so an example of that, okay, just to give you an example, which happens very often, is when you have a customer and let's say you work commission. Let's say you're commission paid. So when you send me in your pay stubs, automatically a good loan officer is going to ask for your year-end pay stub and the one before that. So the reason why is because when you're commission paid, underwriting is going to ask for 2 years to make sure we can use your commission income, but we have to show it for 2 years. So your W-2s and your tax returns are not gonna show commission for 2 years. That's why you have to get the year end, which is your last pay stub for the previous 2 years, to break down that yes, you got paid commission. Now, the reason I stop and wanna go over that is because your loan officer up front should be telling you this, because it's very important that when you get through the conditional stage, it should be very minimal of the conditions that underwriting is asking for, because your loan officer, your lender, should be going through and already answering these questions, and that's one thing that you have to do from the beginning. Every good loan officer should be, once they see the documentation, they should already be answering the boxes that underwriting is going to ask for. That's because you have to know your file, you know what they're gonna ask for, you already know what they're gonna condition for, okay? So once you have a conditional approval, the next step of that is gonna be final approval. What that means is that underwriting has taken the time, they reviewed, they say, hey, we need, let's say you didn't get the year-end pay stub. They're gonna say, hey, we need a year-end pay stub, we need this, we need that. Now we have a final review. Now, for most lenders, or maybe not most lenders, unfortunately, but for all good lenders, the final review should in fact be a final review, right? So what happens is oftentimes is customers get into the situation to where they're like, hey, I provided everything, but I'm not getting approved. We don't know what's going on. We're stuck at this stage. Unfortunately, that is because oftentimes as a lender, they may not be getting everything you need up front and getting everything in at one time and letting everything be reviewed at once. So you're going back and forth to underwriting. That's the one thing you don't want to do. So as you're going through the process, when you get conditions back from underwriting, you need to first, I would ask, you need to make sure when you get through everything and your lender comes to you and say, hey, we need this. You need to ask them and say, hey, is this coming from underwriting? Has my file been to underwriting? Because you don't want back and forth with underwriting. You want them to look at it one time, you answer the questions, and then they look at it for a final review. So once you have your final review, now mind you, there's some other things, I'm just talking about from the customer's perspective, what you need to provide as far as your documentation. They look at a final review, they sign off on it. Now in the background, of course, you can't have a final review without having a appraisal that needs to be done. Homeowners insurance that has to be finalized. So title has to be done. So there's other items there, but we're just talking customer documentation, the process from the customer's point of view, what you need to get through your loan process, okay? So once you have a final review, underwriting says, hey, yeah, answered everything. Thank you, Mr. Customer. Thank you, Mrs. Customer. You did everything great. Here's the answers. Boom, boom, boom. Everything is final. Boom, we're done. From there, what you're going to get now is going to be a CD, which is a closing disclosure. This is gonna have your rate that you locked in for. It's gonna go over your payment, taxes, insurance. It's gonna break down all the fees that are included in your loan. Please make sure you look at your CD and ask your lender if you have any questions on those, okay? And then at the end of that CD, you're gonna have a final, or basically cash to close is what you should see on there. That cash to close is gonna be the number that you have to get into title to close on your new home, okay? Once you have that, your CD goes out. There's a time frame that before, so many days have to pass before your docs can go out to title. So once your CD goes out, the next step, which is number 6, if you're keeping track, number 6 is going to be your documents have been sent out to title and you're good to go. So it's really, that process should be really that simple. Going through the loan process, I know that, oftentimes the experience can be different. Well, I was going this, but honestly, at the end of the day, your loan process is really 1, 2, 3, 4, 5, 6. 6 simple steps gets you to the end of your loan. Now, determining how smooth those steps are is all about the professional that you work with. So you've got to do a good job of picking the right lender, not only as far as loan officer, but you want to make sure the lender is also the right lender to work with. That's going to have a smooth process that they can get you through, and they can actually close the loan. That's another part of it, that everyone thinks all lenders are created equal. I can rest assured, I've worked for quite a few through the years. I've been in this business for a long time. All lenders are not created equal. So just keep that in mind. But to break down that 6 simple steps is really simple when you go through. And there really shouldn't be much stuff, you know. Like I said, the main thing is making sure that the person you're working with knows what they're doing, because up front, once you provide everything up front, everything else should be smooth sailing from there. Okay. All right. So hope you guys enjoyed it. Always make sure you hit like, subscribe, comment, and there's always ways to connect with me if you guys have any questions. Take care.